the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3, and it's now time for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares were little moved as most Asian markets traded lower today. So if you look at the Straits Times Index, it was 0.04% and the green at 4,275 points at about 2:39 p.m. Singapore time. And that's with a value turnover of some 791 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI ended in the red, though, down 0.18% at 4,265 points. In terms of value turnover, that's 1.37 billion Sing dollars. Gainers trailed losers 216 versus 359. Top advances for today, we've got for you UOI, GMHUSD and IHH. And top decliners, we have here Horpa, VentureCo and iFast. Now, in terms of counters to watch, we do have for you Singapore Post or SingPost, and we'll tell you why in just a bit. But elsewhere, from how Singapore's factory output decreased 7.8% year-on-year in August, missing expectations, to US President Donald Trump's new tariffs on pharmaceuticals, trucks and furniture, we've got more economic headlines in focus today. So let's begin, shall we, with SingPost. Well, SingPost said yesterday that it has named Mark Chong as its Group Chief Executive Officer with his appointment effective on the 1st of November. He is currently Singtel's Group Chief Corporate Officer, a role he was designated in January this year. And Mark Chong, he is also a board member of the Civil Aviation Authority of Singapore and chairman of the regulator's Cyber and Data Governance Committee. So shares of SingPost up 1.176% today. Well, aside from SingPost, another counter that we do want to set our sights on for today is supermarket operator Sheng Siong. And that is because the firm is set to move its HQ, warehouse and distribution centre to a new site in Sungai Kadut to support its expansion plans. Now, Sheng Siong said that the move aligns with its plans to add 3 new stores each year over the next 10 to 15 years, and also to expand and enhance its long-term warehouse management and logistics capabilities. Now, what about the new Sungai Kadut site? Well, the new Sungai Kadut property can support at least 120 supermarkets. It is 2.5 times bigger than the company's Mandai Link site, which currently houses its HQ, warehouse and distribution centre. And also to support its expansion, Sheng Siong also intends to adopt new technology that reduces manual handling, minimises error and increases workplace safety. The group said this will strengthen its warehouse management operations and improve cost efficiency. What do you think? Well, as we continue to digest the news out of Sheng Siong, let's take a look at what's happening with regards to factory output right here in Singapore. Well, Singapore's factory output decreased 7.8% year-on-year in August, missing expectations and also marking a reversal from July's upward revised 7.7% growth. Now, that is according to data from the EDB out today. So in a Bloomberg poll, the median estimate by private sector economists was a 1.9% contraction. And excluding the volatile biomedical manufacturing cluster, output decreased 2.9% year-on-year, reversing from July's revised growth of 10.1%. But on a seasonally adjusted monthly basis, output contracted 9.7% in August, compared with July's upward revised figure of 8.8% growth. Excluding biomedical manufacturing, output decreased 3.5% in contrast to that 7.8% growth seen in the previous month. Now, if we look at the breakdown, most clusters posted year-on-year contractions in production, and that is with the exception of chemicals and transport engineering. Meanwhile, if we zoom in on the linchpin electronics cluster's output, that declined 4.8% in August, reversing July's 14.7% gain. And within the cluster, the sole growth was coming from infocoms and consumer electronics at 42.4%, driven by higher production of server-related products. Now, we've talked in depth about what happened in Singapore today, so let's talk about the region. Well, across Asia, markets retreated because of several things. One, nagging uncertainty about U.S. interest rate outlook. Two, data showing the U.S. economy faring much better than expected. And three, fresh tariff warnings from U.S. President Donald Trump. So let's talk about U.S. economy. Well, data out last night showed second quarter U.S. economic growth hitting 3.8% instead of the 3.3% first thought, as consumers spent more than expected, and the reading marks the fastest quarterly expansion for nearly 2 years. So that will weigh on investors as they look ahead to tonight's release of the Fed's preferred inflation gauge, or the Personal Consumption Expenditure (PCE) Price Index, as well as next week's non-farm payrolls report. Now, aside from that, traders are also keeping a wary eye on Washington as lawmakers bicker over that funding package we've been talking about for the entire week to keep the government running as the deadline approaches next week. And in fact, all three major indexes on Wall Street ended overnight in the red, falling each day since hitting record highs on Monday. And in Asia today, no surprises there. Tokyo, Hong Kong, Shanghai, Sydney, Seoul, Wellington, Taipei, and Manila retreated, with Jakarta rising. Sentiment, as we talked about earlier, was also weighed by Trump's new tariffs on pharmaceuticals, big rig trucks, home renovation fixtures, and furniture, which we'll elaborate on them later on. So Trump announced a 100% levy on branded or patented pharmaceuticals from Wednesday, unless firms build manufacturing plants in the U.S. So Asian pharma firms retreated in response, Shanghai Fosun shedding their more than 4% and South Korea's Daewoo off more than 3%. Japan's Daiichi Sankyo and Astellas Pharma were also well in the red, and Sydney-listed CSL shed around 2%. So let's take you through the closing numbers for today. Australia's ASX 200 closed up 0.17%. Nikkei 225 in Japan closed down 0.8%. South Korea's Kospi closed down 2.45%. Hong Kong's Hang Seng closed down 1.33%, and the Shanghai Composite closed down 0.65%, mostly in the red as well. And now, more on Trump's latest tariff threat that we've talked about earlier. So basically, Trump unveiled this fresh round of punishing tariffs on a broad range of imported goods. Earlier, we talked about pharmaceuticals. That's right. His new round of tariffs include 100% duties on branded drugs, 25% levies on heavy-duty trucks set to come into force next week. So the latest salvo, Trump said that was to protect the U.S. manufacturing industry and national security. It also follows sweeping duties on trading partners of up to 50% and other targeted levies on imported products such as steel. Now, Trump's latest announcement on Truth Social did not mention whether the new levies would stack on top of existing national tariffs. But if they go by recently struck trade deals with Japan, the EU, and the UK, they include provisions that cap tariffs for specific products like pharmaceuticals. Now, in response, Tokyo said it was still analyzing the potential impact of the new measures, which Canberra called quote-unquote unfair and quote-unquote unjustified. Meanwhile, Trump also followed through on a pledge to bring back America's furniture business, saying that he would start charging a 50% tariff on imported kitchen cabinets and bathroom vanities and a 30% tariff on upholstered furniture, and all the new duties will take effect from the 1st of October. But what is interesting here is that the new actions are actually seen as part of the Trump administration's shift to better established legal authorities for its tariff actions, given also the risks associated with a case before the Supreme Court on the legality of a sweeping global tariffs. Again, what do you think of the latest round of tariff threats? Let us know anytime at 88550893. Once again, the magic number here is 88550893. And that's all that I have for you on Market View. I'm Chua Tian Tian.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.